Hello, this is John Piper with the weekend video, and it's Saturday the 12th of November. Thought we'd start with gold today, which has confounded everybody, including myself. We saw the move here, which I've been counting as the first leg of a new bull market. We had the ABC decline down to here, which looked fairly convincing. We then got a fairly decent rally. We had all the hype, as it were, about the Trump victory and the gold shooting up, which of course it did do initially, but only for a short period of time. We then saw this huge spike, as it were, and we kept on going lower. Now my call was for a move of 500 points plus, the basis being this is wave 1, which is 300 plus points. This was wave 2, and that we're now due the wave 3. I did, however, mention that one possibility, because this wasn't really that convincing, was that actually this was an A wave, and this is now a B wave, and this is now a C wave. So the call for a 500 point rally remains intact at the moment. That of course could change, but let's have a look at the parameters of what we could see if this is simply a C wave decline before we actually go up. I mean, we have got all these people, I mentioned these before, plugging away at gold. I can't remember his name now, but Rickard's and various other people saying gold's going to go through the roof, blah blah blah. The wave pattern supports that, but it also allows for this C wave decline that looks like is now coming in. Clearly any move back below here would negate the whole thing, but right now a C wave decline is the best count, I think. And we actually have two key levels of support at the moment. This move here from the peak to the trough is around 140 points. So 140 points off the peak just below 1340 takes us down to around this level here, 1200, 1190. We also had the 50% retracement level. The rally here was around 1040 to around 1380, so around 340 points. So 170 points off here takes us down to around 1210 or thereabouts. So we've got a number of key support levels in this area here between 1190 and 1210. So that's one area where you can expect support to be met, at which point this decline here would be equal to the decline here. It would be fairly short and sharp maybe, but certainly would have chased away a lot of the bulls, stopped out a load of people. So that's the first level of support. If that doesn't hold, then we'll have to look at this again, but right now I'll be looking for buying opportunities in that level, 1190 to 1210. Alright, silver, the wave count is the same, kind of a one wave at the moment. It actually held the 200-day moving average, so that was encouraging, but in fact it was also encouraging that it managed to remain quite stable, but it's now fallen back quite sharply. But after gold has, still holding the lows in fact, but has broken the 200-day moving average. Slightly more complicated pattern here, because the 50% level is around here also, so that's a 50% retracement level, so we've got quite strong support around there. It's possible, I guess, that on silver this could be an A, B, C, a B. This will be some part of some C wave here. Remains to be seen really. I think we had to sort of watch it, but certainly 17 now looks vulnerable. If gold's only going to fall a little bit further, I mean it's currently not too far away from those support levels I mentioned, then silver might do the same, but needs watching really. For my own trading, I've basically closed out all the spread bets, pretty much all been stopped out. I did hedge a bit with a short position, but the stocks and everything else remains in place for now. I'm fairly relaxed about that. I wish they were going up, but I think the wave pattern remains positive in the longer term and the medium term. Just need to get this sell-off out of the way, and then we're going to go higher, I suspect. I could of course be wrong about that. Alright, FTSE, quite an interesting pattern on FTSE. We had the peak here. We had a 1, 2, 3, 4, and this very sharp 5, which counts quite well as a 5-wave decline. I mean, it's not that classic, I guess, in the sense that the time frame gets shorter and shorter, so quite a big 2-wave, fairly truncated but quite strong 4-wave, and then this 5th wave that's over in a flash. Waves 1 and 4 do not overlap, which is a key rule, so that's A-OK. We then shot up on the Trump victory, 500 points almost, and now we've fallen back 300 odd points. Hard to make too many predictions here. Let's go down a leg. I would tend to be positive actually. I mean, that's a very strong spike. Possible 1, there's sort of 2 of thoughts there, 3, 4, 5, A, B, possible C down to there. That's peak of 7,000. That was a 200 point fall. 6,850, 6,650 where A and C are equal. So an early sell-off come Monday between say 6,650 and 6,700. If there's some kind of spike in this area here, then that might be a good buying opportunity if it's a decent spike. If we break below there, then I would think we're going to retest these lows quite closely and maybe even break them, in fact. Quite why FTSE should do that, I'm not quite sure, but ours is not reason why, etc. So anyway, I think this looks positive at the moment, unless we see something else, and we could see a decent buying opportunity come next week. Alright, the DAX saw the peak around here. Again, a possible 5-wave decline. 1, A, B, C, 2, 3, 4, and 5. However, the rally's been stronger. How much was that? 700 plus points, and a very muted decline so far, suggesting that it wants to go higher. A couple of decent spikes there as well. So I think, well, at the moment this looks quite positive, suggesting we can move higher. And as I said, I think FTSE also looks positive. So, and FTSE is probably a better buy in the sense it went lower, maybe. Anyway, let's look to the. Alright, finally the Dow. I showed this chart of the ABC pattern, which looked pretty good. We then did go up, but then we shot down on the Trump victory, shot up again, no real selling at all. I think it was a holiday yesterday. Anyway, the Dow looks just positive. There's nothing really negative there at all. Lessons from the Trump victory. I guess what may have happened is that nobody paid any attention to what Trump was saying, because nobody thought he would get in. And once he got in, people actually started to pay attention to what he was saying, and what he was saying looked pretty good for equities, which is possibly one way of looking at the thing. It's hard to keep an open mind actually when everybody's saying one thing, that everybody says Trump's not going to get in, as well virtually everybody was saying. It's quite hard to actually accept that that may not happen. And then of course everybody else was saying that stocks would collapse, gold would rally, all that kind of stuff. And they were totally wrong. And again, one really has to isolate oneself from all this kind of stuff. It's but hard to do when it's coming at you at every angle these days, with emails, news reports, websites, the whole lot, all coming at you in a great rush. It's quite hard to do that. Anyway, the market has done what nobody expected, which is what we ought to expect. I think that sums it up. Well, thanks for listening. Have a great weekend. See you again on subscribers on Tuesday, and bye for now.